Hi everyone, good to have you here. This is E Plus Academic Resource Center. Thank you for joining us. Okay, all right. So quickly, let's delve into today's class. We're going to be looking at correction of errors under financial accounting. Okay, we've done a bit introduction of this subject on our TikTok page. Okay, so we are going. This is the full class. Just like I mentioned in the preview class, um, this subject is somehow confusing for students. Students are actually complaining that this is one of the toughest subjects for them. But, it actually is one of the simplest. Yes, it's actually one of the simplest. So I need you to focus, put your mind together, bring your writing materials, and make sure you watch the video to the end. And invite people also to be part of what we're doing. Okay, so we're not going to finish, we may not finish this class in one sitting. So we're going to have maybe part two, part three, as the case may be. But let's just start something and see where it takes us to. Okay, all right, so correction of errors. Now, when we say correction of errors, what do we mean? Now, correction of errors. First of all, what are errors? Okay, errors are mistakes. Okay, now when we talk about errors in financial accounting, it has to do with mistakes arising from postings of transactions, okay, or collating of transaction, or transferring or drawing up of transactions. Okay, it can happen. Maybe a figure, you're supposed to enter this figure into this class of accounts, you enter it into this one. I know things happen. Human errors, yes, they happen. Okay, so when we talk about errors in financial accounting, it has to do with misposting or drawing up of the wrong drawing up of maybe the trial balance, or wrong entry of account and all that. Okay, now when we try, now these errors, the act of trying to what correct them is what we refer to as correction of errors in accounting. Okay, trying to set the record straight and make sure that every detail or every entry is posted correctly. Okay, now there are errors, there are types of errors. We have two types of errors. There are two types of errors basically in financial accounting. The first one, errors that affect the trial balance. Then the second set of errors that do not affect the trial balance. Or let me take it this way. The first set of errors are errors that do not affect the trial balance. Do not affect. That means they will not stop the trial balance from balancing. They will not stop it from balancing. Whether you commit those errors or not, the trial balance must stay balanced. Okay, remember the trial balance is the list of balances extracted, okay, to test the arithmetic accuracy of our postings or our transactions. That's what the trial balance is. The final account of a sole trader, you test it, you test the postings if they are correct by drawing up a trial balance. Okay, so these errors, when you commit them, they will not affect it. They will not affect the trial balance. The trial balance will still balance. While the second class of errors are errors that will affect the trial balance. So if you commit those errors, your trial balance will not balance. Okay, if you commit those errors, your trial balance, there's nothing you can do. It will not balance. Okay, so now let's talk about the first set of errors. Now, for the errors that will not affect the trial balance, we have number one, error of omission. Okay, error of omission. Now, this is from the word omission. This is when an account has been, a transaction has been omitted completely from the books. You can't find it anywhere in the final accounts. It's omitted. And this will arise from maybe when the source document of a transaction is misplaced. You know, we move transactions from source documents to subsidiary books, from subsidiary book to ledgers and all that. So source document is the originating source of transactions. So when you can't find a source document for a transaction, that means you can't enter that transaction in the rest of the books. Okay, so this error of omission may arise when source document has been misplaced. Are we together? Okay, so that is error of omission when you cannot find a transaction in a transaction in the books. Do you get? I don't know if you understand it. For instance, if I sell goods worth 1,000 naira to a customer and I issue him an invoice, okay, I issue the customer an invoice, a receipt. Now that receipt, I somehow misplaced it. Do you know that 1,000 naira, you will not be able to find it anywhere in the books because I can't find the receipt so that I can enter it into the books. That's omission. Then secondly, we have error of commission. Okay, sorry, this is off. Error of commission. Okay, now error of commission is when a transaction or a posting has been made in the wrong account, the same class of accounts, personal account, okay, but it was posted into another customer's or another supplier's account, another person's account. Now, there's something fundamental I need you to note here. When we talk about correction of errors, most part of these errors arises from classes of accounts. So I will put, there's the video we did on classification of accounts. I'm going to share that link in the description section so that you go and watch that class, okay, where we talked about the classification of accounts. Very important. Where we talk about the real accounts, the nominal accounts, the person's accounts, and all that. It's going to help you if you understand that classification of accounts. It will help you know what we're talking about here pertaining to correction of errors. Okay, so I'm going to share that link to that class in the description section so that you go and watch that classification. You need it. You need to know what we mean by classification of accounts for you to understand errors. Are we together? Okay, so when we talk about error of commission, now persons account belonging to human beings, to persons. Okay, this is when you commit that error of commission. You are committing that. You are simply recording a transaction that is belonging to one person to another person. For instance, you did a transaction with Chinedu. Instead of you to record that transaction in Chinedu's account, you went and recorded it in Chidindu's account. You know, sometimes it happens. You might have a name that may sound alike, but they are not the same. Okay, Chinedu, Chidindu, they sound alike. So you may want to record something under Chinedu's account. You mistakenly record it under Chidindu's account. So maybe at that point you thought Chinedu was Chidindu. Do you understand? So when you commit that error, it's called commission, error of commission. Do you understand? All right. So number 3, we have error of principle. Okay, we have error of principle. Okay, now when we talk about error of principle, we're simply saying you record a transaction in the wrong class of accounts. Okay, a transaction in the wrong class of accounts. Now, when we say purchase of furniture and fittings, okay, and furniture and fittings expenses, these are 2 different classes of accounts. Now, when they write a right amount, when the correct amount is recorded in another class of accounts, okay, you see they look familiar. Purchase of furniture and fittings, then furniture and fittings expenses. These are 2 different classes of accounts. Purchase of furniture and fittings is asset account or tangible account. While the other one, furniture and fittings expenses, is a nominal account. Okay, is a nominal account. So when you, instead of you to debit furniture and fittings account, you went and debited furniture and fittings expense account. So the right amount being recorded in a wrong class of account, you have committed the error of principle. So when you maintain it that way, it will not affect your trial balance. I don't know if you understand it. Now, because in your trial balance, the debit column of your trial balance is your asset, you debit assets and expenses. You see why it will not affect your trial balance? Because your debit side of your trial balance is, the debit side is for assets and expenses. And purchase of furniture and fittings is assets. Then furniture and fittings expenses is also an asset. It's also on the debit side. Sorry. Let me come again. Purchase of furniture and fittings is recorded on the debit side of your trial balance. While furniture and fittings expenses is also on the debit side of your trial balance. You see why it will not affect your trial balance? Because both accounts have debit balances. Yes, they have debit balances, but the issue now is that they are of 2 separate class of accounts. So you have committed the error of principle. Then we have number 4, error of original entry, sometimes called transposition error. Okay, now this is when the right amount is wrongly what entered. Is the right amount now is wrongly entered in an account, and it is being maintained like that to the end of the account. For instance, there's a transaction of sales of 515 naira. 515 naira. You made sales of 515 naira. So instead of recording 515 naira, you recorded 551 naira. So that's why I said sometimes it's called transposition error. So instead of 515 naira from source document, the transaction was 515 naira. But when entering into the books, you recorded it as 551 naira. So this is the original entry, but instead of you to record this entry, you went and recorded this one, and you maintain this one to the end of the recordings, to the end of the postings. It will not affect your trial balance. So that's an error of original what? Entry. Original entry. Or transposition what? Error. It's sometimes called transposition error. When the right amount is wrongly entered. Is wrongly entered into an account. The entry is correct. The posting, whether debit or credit side, will be correct. But the only issue here is that the wrong amount is used. The wrong amount. Instead of 515, you used 551 all through. Do you get it? Now, number 5, we have error of compensation. Error of compensation. Error of compensation. Okay? Error of compensation. Now, when we talk about compensating error, okay? Now, compensating error or error of compensation or compensating error, sorry. Compensating what? Error. Now, this is when an entry, okay, from one account is cancelled by another entry from another account. It's cancelled by an entry from another account, okay? An entry from one account, maybe an account that is overstated, okay, will be cancelled by another account that is overstated in another on the debit or credit side of either of the accounts. Now, this is what I mean. If we have maybe okay, let's look at this is debit side, this is credit side of trial balance. Yeah, trial balance. Let's say these are trial balance. I'm trying to explain something now. Now, when we made sales, if maybe our sales ledger or sales account is overstated by 2 or 500 naira, sales account, you know, sales is on, it will be on the credit side of trial balance because it's an income. Okay, it's an income. So if sales here is overcasted by 500, okay, now let's say salaries here is overcasted also by 500 naira. Okay, because salaries are expenses. Debits, assets, and expenses, where credit liabilities and income. Okay, so if wages, salaries here or wages is overcasted by 500, then on the other side, sales also is overcasted by 500. The two overcasts will cancel each other. This will not affect your trial balance because we have 500 on this side, 500 on this side. They will cancel what? Each other. Do you understand? Now, if there are other transactions on the credit side and other transactions on the debit side, if by totaling you see that this place is more by 500 and this place is more by 500, you will notice that your account is trial balance will stay balanced because we have 500 on this side, 500 on this side. But if we only have 500 on one side, and you finish summing up, you will notice that here will be more than, the credit side will be more than this side by 500 because only sales was overcasted and maybe salaries was not overcasted. So that is when that error will affect the trial balance, but that error is not here. So when we say compensating error is when either of one account on one side is overcasted and the other one account on the other side is overcasted also with the same amount. Two of them will cancel each other automatically. without you even noticing. Do you understand? Okay. Then the last but not the least, we have complete reversal of entry. Complete reversal of what? Entry. Complete what? Reversal of entry. Complete what? Reversal of entry. Now, when we say complete reversal of entry, now this error occurs when an account that is supposed to be debited is credited, and an account that is supposed to be credited is debited. Do you understand? You're supposed to debit this account. You mistakenly credit it. On the other account, you're supposed to debit it. You remember the double entry principle. Every credit account, every credit and debit entry must have a corresponding credit entry. So instead of you debited this account, instead of you to do the corresponding credit entry, okay, that account that you debited, you went and credited it and passed the double entry principle. Now, this is what we mean. For instance, if we receive cash from a customer, from a debtor, we receive cash. The cash book is supposed to be entered on the debit side of the cash book, then on the credit side of the customer's account. Okay? Do you understand? If we receive cash from somebody that is owing us, if we receive cash, if we receive money from a debtor, we are supposed to enter it in the debit side of the cash book, then pass the double entry principle on the credit side of the customer's account. But in this case, we commit the error by crediting cash book and debiting the customer's account. Do you understand? So when you do this, you have committed the error known as complete reversal. From the word complete reversal, you reversed everything completely. Okay, so instead of you to debit cash book and credit customer's account, you went and credit cash book and debit customer's account. That is complete reversal of what? Of entry. Do you understand? Let me run over again. Error of commission, when you omit from the books, okay? You omit completely from the books. Commission, so if you enter the right amount in the wrong person's account, okay? We'll have original entry. You use the wrong amount. You transpose the figures and passed it like that from the beginning to the end. Then the compensating error, we have where you have one account that is overstated, or the other account overstated too, cancelling each other, okay? Then the complete reversal of entry, when you interchange the entries completely, okay? Now, after this, we have, let's see the errors that affect the trial balance. Now, when we say errors that affect the trial balance, we have several of them in no particular order. We have the transposition error. Now, this transposition error here is not... it's quite different from the complete reverse, the original entry. The one we mentioned earlier is quite different. Now, the difference is this. This one was maintained from the beginning of the source document. But this transposition error in this case now, for errors that will affect the trial balance, okay? Errors that will affect the trial balance. Okay. Now, for this particular kind of error, it's when the transposition is done as somewhere along the posting, not from the beginning, not from the source document, somewhere along the posting. Now, remember, from source documents, you post to the what? Subsidiary books. From subsidiary books, you post to your what? Your ledgers. From your ledgers, then you draw up your trial balance. This is the sequence. From your source document, you post to your subsidiary or prime books. From your prime books, you post to the respective ledgers. From the respective ledgers, then you draw up your trial balance. Now, from the transposition we mentioned earlier, is from this point. If it happens from this point and you maintain it till the end, it will not affect your trial balance. But if somewhere along the line, this transposition now happens somewhere here or somewhere here, it will affect your trial balance. That is why it is the transposition here is not the same as the other one, the one we mentioned earlier. Okay, all right. Then number 2, we have overstatement or understatement of what? Opening balances. Okay, opening balances. Okay, overstatement or understatement of opening balances. When you have an opening balance, maybe a capital account or something, instead of you to write the actual figure, maybe you have capital maybe as 5,000 naira. You went and overstate it maybe by 5,500, or you overstate it with maybe understate it with 4,500 and all stuff like that. Okay, it will affect your trial balance. Then we have maybe misposting or miscalculation. Let's use miscalculation of what? Of entries in the what? Trial balance. Okay, in the trial what? Balance. Okay, miscalculation of entries in the trial balance. It will also what? Affect your what? Trial balance. Are we together? We also have partial reversal of entry. Okay, we have partial reversal of entry. This is when maybe, you know, the double entry principle. Every debit entry must have a corresponding what? Credit entry. So instead of you to carry out the double entry principle, you went and do debit instead of debit and credit. You went and do debit or credit. Okay, you didn't pass the double entry principle. You debited a transaction twice or credited a transaction twice. You didn't do the double entry principle by debiting and crediting. Do you understand? Yeah, this one can also be called the casting errors. Okay, casting error. Same thing as casting error. When totaling the trial balance, instead of you to total accurately, you went and maybe overstate or understate a calculation and all that. You will have it will affect your what? Your trial balance, because the figures will not be the same. So there are so many errors like that. You know, when we talk about errors that affect the trial balance, it depends on the kind of error you committed. Okay, it's not like the error that will not affect, that will have them clearly stated. Errors that affect the trial balance, it's not standard. Okay, it's not standard, it's not well outlined, because it can happen at any time. It can take any form. Okay, it can take any form. It can be overstatement, it can be wrong posting, maybe from the trial balance or somewhere, somehow. Okay, so that's that. Then let's continue. I think the class is becoming too long. Okay, let's now let's look at one more thing before we call it a day for today. So this will be our part 1, then we'll continue in the next class. Now there's what we call suspense accounts. Okay, suspense accounts. Suspense account. Okay, now when we say suspense account, now we mean from the word suspense, something that is under reserve, something that is holding. It's under suspension, something that is withholding, that we are keeping something on hold. Something is standby. Okay, that's the English, the literal meaning of when we say suspend. Something is standby, something is suspended for now, something is on hold and all that, temporarily on hold. Okay, so now when these errors happen in the postings, now when the bookkeeper or the accountant or whoever is auditing the account suspects or finds out that an error has been committed, that person will open what we call the suspense account. Now, when drawing up the trial balance, okay, when drawing up the trial balance, all right, after postings, the difference on the trial balance, you know, normally your trial balance is supposed to balance, but when you notice a difference in your trial balance, okay, that difference will be recorded under suspense account, will be carried to what we call the suspense account. Let's say, for instance, the debit side now of our trial balance has a total of maybe 5,000, okay, and the credit side of our trial balance has a total of 5,500. Now the difference here is how much? It's 500, right? So the suspense account will be debited. We have a debit balance of 500, so that we can have 5,005. So the suspense account, if it has a debit balance, it will be recorded under the current assets of your balance sheet. Okay, it will be under the the current asset column, the current asset of your balance sheet. That is where you record, you carry out, you move the suspense account. But if the suspense account is having a credit balance, it will be under the current liabilities column of your balance sheet or your statement of financial position. Okay, to be on the current liability. Now, there's something important you need to know. The suspense account is a temporal account. It's not a permanent account. It's not supposed to linger. It's not supposed to be in the account for too long. It's not supposed to appear in the books for that long. It's an error. It's a mistake that needs to be ratified. It's an error. So it's not supposed to be in the books for that long. So you just carried out a suspense account so that your account for that moment can tally, so that your account for that moment can balance while you rectify and find out where the error is coming from. So for the fact that you entered the difference in a suspense account, don't mean you should go and sleep and fold your arms. No. Suspense account is not supposed to be in the books at all. But you are making provision for that so that at that moment your account can balance, your account can tally, so that you look for where the error is coming from. So when you move suspense account to your financial position and maybe so that your account can balance, or so that you can render to your users of financial information, the people who ask you to do one or two things with the account, while you show them that you are equally locating where the error is coming from. That is the function of a good bookkeeper. Are we together? All right, so that's what basically suspense account is all about. There's no much deal about suspense account. It's just simply where you record the differences you find in your trial balance, the differences which must have emanated from errors from the beginning. Okay, the differences, you record it in the suspense account and pass it to your statement of financial position in the respective columns, while you rectify or find out where the error is coming from. Are we together? All right, we're going to stop here for now. We're going to continue in the next class. Don't worry, correction of errors is not a difficult subject. Use the comment section, ask me questions. Let's get to learn. If you don't ask questions, you might not get it, except you understand what we're talking about. But if you don't understand, ask questions. We'll be more than glad to answer you. All right, invite people to be part of what we're doing. Like, share, subscribe if you have not done so. Hit the notification bell so that you get notified when we make videos like this, when we make classes like this. If you know you're deriving value, you're getting value from what we're doing, please subscribe and share our videos. Thank you. See you in the next class.